It's getting worse. Ladies and gentlemen, heading into the weekend, and no, we are not talking about the continuing saga with former President Donald Trump and potentially his arrest that could be coming shortly, and the suspicious powder found at the Manhattan DA's office. No, we're not talking about that. We're talking about the banking crisis. Both of these are very riveting, but the banking crisis directly involves your money, and it is moving around markets here today. Initially, in pre-market, markets were down about 0.5% to 1% across the board. Now, all the indexes are firmly in green territory. So what is going on? What are the latest developments? How is this affecting AMC and maybe your portfolios? What's going to be coming? What does the data look like behind AMC and GME charts? All that good stuff. We're going to get into it. If that sounds like something you want to be a part of, hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section because it is free 99 to do so. So, first things first, Deutsche Bank, they fell today following a spike in credit default swaps Thursday night as concerns about the stability of European banks persisted. And it was down about 14% at one point, and then it did close about 8.6% lower. Now, the German lender's Frankfurt listed shares retreated for a third consecutive day and have now lost more than a fifth of their value so far this month. Credit default swaps, a form of insurance for a company's bondholders against its default, leapt to 173 basis points Thursday night from 142 basis points the previous day. So someone somewhere is making a pretty big bet that maybe Deutsche Bank does go bankrupt. Now, what's interesting about this is fundamentally speaking, Deutsche Bank has been in a restructuring program since 2019, and they have now seen 10 straight quarters of profitability. This is a good thing. I would say SVB and Signature Bank and these other banks that have faced similar hardships were also profitable. They were also in seemingly good shape, and in the end, that didn't matter. Now, it goes on to say that their measure of solvency is pretty good. Now, its CET1 ratio came in at 13.4% at the end of 2022, while its liquidity coverage ratio was 142%, and its net stable funding ratio stood at 119%. These figures would not indicate that there is any cause for concern about the bank's solvency or liquidity position. Now, these numbers could have been true for SVB or Signature Bank as well. I mean, they were in better shape, arguably, than Deutsche Bank. I mean, given the mark-to-market securities minus that, right? Now, does this really matter? Does liquidity or solvency ratios and percentages really matter in this current market environment? Probably not. That is because people don't care. Obviously, someone somewhere thinks there's a pretty good chance that Deutsche Bank is going to be the next one to fall, and when you get panic like this, people are just pulling their money out. That's the bottom line. When people start to pull their money out, these ratios get skewed very, very quickly. And that is partly what you are seeing today. Now, the American stock market, as resilient as it is, was down 0.5% to 1% earlier in the day. Most of this was in pre-market, and typically the American stock market likes to be pretty bullish and just ripped off of the opening bell. Now, the problem is, over this weekend, you could get some new developments that could shake things up. And you have seen a pretty strong week relative to what has actually happened. The Fed raising rates, the summary of economic projections showing lower growth for the next 2 years, higher inflation, and a higher Fed funds rate. Any new news over the weekend is going to be very big coming on Monday. And it would not surprise me to see a continuing sell-off in bank stocks and the broad markets into the close here today. It looks like you are seeing that currently. Now, On top of that, how does this affect the broad markets and AMC? Well, broad markets wise, when these banks start to go BK and people start to pull out their money, number one, a lot of people are putting their money into bonds right now. They're putting their money into treasuries. This is making the treasury yields actually fall. As bond prices go higher, yields go down. Bond prices go higher by people buying bonds. And that is exactly, again, what is happening here today. And that goes against the logic of fighting inflation. Essentially, we collectively around the world that are fueling this banking crisis are loosening financial conditions. Now, when inflation is 6%, loosening financial conditions is probably not the best thing in the world. And the Fed has made it very clear that they are not going to cut interest rates in 2023. Well, that's a problem because the markets are pricing in 75 basis points to 100 basis points of essentially rate cuts for 2023. That means that either inflation is going to plummet, like fall off of a cliff in the next couple of readings, or the economy is going to go down the toilet. That is why I regularly like to warn you guys, especially recently, to really save as much cash as possible. You want to have as much money to go in the markets as possible, as well as in your bank account in case you needed it if you lost your job or something. Because the markets right now, the bond markets, the stock market, we're forecasting a very hard landing right now with what the bond yields are doing and where inflation is currently at. So with that being said, guys, does not boast well for the stock market. Now we'll get into all of the economic data and everything that's going to be happening next week in some of the next videos over this weekend. If you guys want to stay up to date with that information, if you guys want to know what's happening in the markets, know what's happening with your money, then subscribe to the channel, hit the notification bell so you guys will be notified when these videos are posted. Nonetheless, with AMC. Now, AMC, beautiful creature that you are. We're waiting for updates. That's the bottom line here. We're really waiting for updates around April 27th, around this court date, because this goes one of two ways. Either the courts say this is dismissed and AMC can proceed as planned, and in that case, it's already priced into the stock. You're probably not going to see too much downside from here. And obviously, they would go ahead and do the split and all that good stuff. Now, second way this goes is the courts give us a little bit of an update. They put out another court date, probably another month or two in the future. Now, I think that's the most probable outcome here. But believe it or not, every time AMC has raised capital, the stock has actually rallied. So I don't necessarily think that it's a terrible thing if this 1-for-10 reverse stock split does ultimately go through. Now, on the other hand, if this does not pass through the court system, there is a lot of people short on AMC that otherwise would not be short on AMC. Let's be very clear. Lots of people don't want to be short on AMC. Like I used in the last video, the analogy, it's like duck, duck, goose. As a kid, I'm going to assume you guys know that game. You sit in a circle, right, in like the gym, and one person hits the head and hits you on the head and starts running. You got to catch them. You got to tag them or sit in their spot more or less, or they have to come back and sit in their spot, right? You guys get the premise of that game. Well, that's kind of what the shorts are doing with AMC. They know eventually they're going to be smacked on the head, and then they're going to have to rush to get out of their short positions. Now, not all of them are going to be able to. Not all of them will. There's a lot of pride here with some of the legacy shorts in AMC, but I like to think there's probably 5 to 10% of the legal shares that are sold short that are only a part of this arbitrage trade, that want nothing to do with shorting AMC in its natural state. You gotta be pretty nutty to do that, since you could get blown out in very short notice, and we've seen that happen many times. So long story short, I do think that is what we have around the corner, especially around April 27th. And from now until then, any new updates are going to be very important. And we'll talk about the charts here in just a minute as well, right after we go through the Ortex data with AMC and GME, because I think that keeps us range bound until we get new information. Now, option activity for the day, 7 orders totaling about $400,000, positive order value of 19%. The option activity has really dropped off of a cliff after this March 14th vote has happened. But what has not fallen off a cliff are the cost to borrow rates. The cost to borrow rates continue higher here today. Cost to borrow max sitting at about 400%. Cost to borrow average at 361%, almost 362%. Cost to borrow minimum still at 85.22%. These numbers are out of this world. So on top of being short for this arbitrage trade, or being a legacy short in AMC, I guess that's probably the best word to call them at this point, you're paying out unsustainable cost to borrow rates. And any sign that AMC is going higher and you start to actually get price action that is indicative of a short squeeze, I think that will furthermore fuel a short squeeze, right? It's one of those things, duck duck goose. You're trying to get back in your spot real quick. You're trying to get in, you're trying to get out. And that's exactly what these shorts are going to be doing. Now, whether that happens before or after April 27th, whether that happens because AMC does pay down a lot of its debt, or maybe all of its debt, either way, I think both of those outcomes do give you a short squeeze. Sooner rather than later would probably be if the courts denied AMC's ability to do this vote. That would probably cause a short squeeze pretty quickly. If we get the 1-for-10 reverse stock split and AMC has to raise capital, it might take a little bit longer. But if you can't tell, either way this ends in a squeeze. There's no other way around it. Now, good thing is, if you currently have positioning in AMC with shares, with options, just forget it. It's a lot harder to calculate this. But with shares, I think the markets fully expect this deal to go through in the court system. I don't think market participants are expecting the judge to entertain this litigation. So I think if it goes through, right, and the judge dismisses this coming April 27th, you're probably not going to see too much downside because it's already priced in, right? So I think you're kind of at your worst case scenario right now. We'll talk about that, like I said, once we get to the charts a little bit more. Interactive brokers. Don't let me get too far into a rant. I could literally rant all day on this. If you can't tell, I'm pretty passionate about the things that we talk about. Interactive brokers, short availability at 0 shares for the day. Last we knew was a 214% cost to borrow rate, continuing to go higher. And for reference here, cost to borrow rates were like 100% March 14th. So a lot higher now. And you can see March 15th was the settlement day for the official short interest on AMC, one day after March 14th, and the short interest continued to go higher. 127 million shares that were sold short at the time of March 15th, 24.64% short interest of free float. Days to cover sitting at 4.45. These shorts are literally playing with fire here. It's insane how ballsy they are really at this point. So there we have that. We're not going to linger on it too much. We are going to go ahead and look at some of the FTD numbers as well, get you guys prepared for what we have next week. So for today, that is March 24th, we had about 10 million FTDs come due. It looks like on Monday you don't have any FTDs that come due. On Tuesday you have 5.3 million. On Wednesday you do have 4.3 million. On Thursday you have 3.4 million, and on Friday you have about 1 million. So FTDs will be another big story of next week as well, and that is something that I think will help keep AMC higher. Now, it'll be interesting to see over the next couple of days and weeks if we go back on the threshold securities list, because it's no surprise, given this arbitrage trade, you have seen so many FTDs come online, and you have never seen this many FTDs ever, besides one day in January, right? When the stock rallied and there was a lot of naked shorts. We know the story there. Well, what's the excuse now? I mean, Come on now. Is there still a lot of naked shorts? Is that what's going on here? Hard to say. Very hard to say. But, I mean, look at the white lines here. I mean, there's a valid argument to say maybe there are a lot of naked shorts right now. So it's even hard to calculate where the short interest might actually be. So let's move on from that. Let's go ahead and talk about the Stocko Tracker data briefly for you guys. And for next week, you are going to have about 5,000 calls currently in the money, 87,000 calls out of the money, 44,000 puts in the money, and 60,000 puts that are out of the money. Not a lot of option activity, but it doesn't take a lot of option activity to get rallies in AMC. Now, granted, I think you're pretty range bound until you get new information, until you get news that comes out about this court litigation. You're probably going to be in this range, and that specific range is if we take a look right here, in between about $4.50 and $6 per share. This wedge right here is really what I'm looking at. And now you are at $4.48 at the time of recording this video. You're 2 cents off of your major resistance level at $4.50 per share. If you zoom this in a little bit, you have broken above $4.50 1, 2, 3, 4, 5 days since March 14th, but you have been unable to close above $4.50 even one day. So I think that is showing a lot of resistance, right? Pretty clear to see. Now, if we can get above that and hold above that, especially even in after hours today, that is what I want to see. If not, I want to see that early next week. And at that point, it's probably going to serve as a very strong support level. And then you can make your way to as high as, $6, $6.20 per share by April 27th. Now, the higher you get, potentially the more risk you have in the short term with AMC around this court date, April 27th. Because if you're $6 per share, then maybe there is, part of the markets that are pricing in this court date will get, dragged out to another court date. A little bit of uncertainty around this whole notion at all. Right, which would mean maybe it doesn't ultimately happen. Maybe this arbitrage trade is wrong. At these levels, I don't think it's fair to say that it's priced in that this court date is going to go anywhere at all. So I think it's pretty interesting there, and I think that's where it even sends you up for some opportunities in the land of options. And if you guys want to come trade with me live in real time, link down below in the description of this video. We did just make a trade on Facebook actually for the next couple of weeks because I think that stock is starting to exhaust itself a little bit, and you kind of see it if you compare the S&P's price action today with Meta's price action today. You can kind of see in just one quick second what I'm talking about. So guys, that is going to do it for this video. Not too much else to actually say. Yeah, that's about it. Actually, one last thing. We did have durable goods orders that came in today. If you guys did not see the last video, that came in at 8:30 in the morning. It came in at -1%. Last month's reading was -5%. Very contractionary numbers here. You were expecting a positive 0.7%, and it came in at -1%. That is very contractionary. That is very much not a good sign for the economy. Might be a decent sign for inflation, though. But then you got the S&P Global Composite PMI, and that came in at 53.3. You were expecting 49. So, again, showing a little bit of upward pressure on inflation, guys. So that is going to do it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.